And welcome to the marketplace, everyone. We'll take you back to the National Education Forum because we'll be expecting the president to deliver an address. When he takes the podium, we will bring you that live here on the marketplace. But turning to our stories this afternoon, government says it has started making fresh payments into the debt service recovery CD account, also known as the sinking fund. Now, this is expected to aid future coupon payments for restructured domestic bonds. My colleague Winston Taki joins me here with more on a statement that was released by the presidency. So welcome, Winston. What payments have been honored so far?
So this happens to be the fourth tranche settlement that has been honored by the government. Previous government has been handling such payment consistently until this government. They also made provision for resettlement of bond owed to the bondholders. It appeared before the debt exchange program began, the government was struggling with controlling inflation. We saw depreciation rising as high as 34%, with inflation rising also to about 54%. There was a push for government to go back to the IMF amidst negative ratings by international rating agencies. So that was when the whole conversation began. The restructuring resolved the conversation about how Labour, some of the bondholders, didn't want to subscribe to the debt restructuring, but timelines were given. Some came on board, some didn't. However, it all went into successful completion. And throughout the process, we've seen the fiscal space provided through the debt restructuring. With this recent announcement, why it became a news was because many were anticipating what would the government do, because it's a new government. How would they handle Ghana's debt situation? So this announcement by the government gives some kind of positive optimism into the financial market. So far, 6.081 billion Ghana cedis has been released to be paid in terms of cash for coupon payment, who are those who are on the domestic debt exchange program so far.
Okay. Also,
and yes, 3.46 billion have been paid in kind to those who have also subscribed to the debt exchange. And this time, this will go directly into that security account, so direct into the account without necessarily being cash. So It's quite critical looking at where the government is going. Certainly, government is scheduled to pay over 24 billion this year, and that will come with a lot of pressure amidst the announcement that is yet to be made in the House of Parliament on March 10th, because many are looking at how the finance minister's position or announcement will be, how Ghana will manage its debt.
All right.
Government has also paid into the debt service recovery, that is a CD account, which is normally known also as the sinking fund, an amount of 9.7 billion as a buffer for the fifth DDEP coupon due in July and August 2025. And this announcement gives government the leverage and the buffer ahead of resettlement of subsequent debt predated July and August 2025.
And these are new payments made by the government into the sinking fund. We'll be talking about that in a bit. But what assurances is the government giving to bondholders on the debt exchange program?
The government is quite optimistic that they will align to the agreement that have been signed with the bondholders, ensuring that there will not be lapses in terms of date and resettlement, and they will honor all pre-agreed conditions under the memorandum that was signed with them. But going forward, many have also anticipated that with this going on, how much will government have in terms of ensuring there's fiscal space to finance critical projects? Government has given a lot of promises in terms of infrastructure, but the fiscal space seems to be a little bit marginal. If that goes on, the issue also is how the revenues will be raised going into the international market.
Great questions, and we are going to be talking a lot about that in the next couple of minutes. Thank you so much, Winston Taki, host Beyond the Numbers. Don't forget to catch his show on Friday at 5:30.
Now we have it on Wednesday too.
On Wednesday?
PM,
Wow.
Yeah.
That's a new announcement for you. Wednesday at 2 p.m. Be sure to catch Beyond the Numbers. But I want to dig into the sinking fund. Associate Director at Deloitte Ghana joins me. He is in the person of Dennis Brown. Good afternoon to you. So, Dennis, first question, how will the restructured domestic bonds benefit from the sinking fund payments in terms of future coupon payments?
Afternoon, Daryl. Good afternoon to your viewers as well. I think, first of all, we need to understand what a sinking fund is. It's not something that is overly technical in terms of meaning. It simply means that government is, putting funds aside for a dedicated purpose. So in this case, for repayment of our debts, right? Let's say we have a finite income source, and so whatever we are generating from our various income sources, government is saying, I'm putting a certain amount aside to repay the coupons as they mature. And what that does, especially for potential or for investors that holds our bonds, is that there's some assurance that as these coupons mature, there will be little to no challenge in terms of recovering your money. There's money set aside for you to, recover the funds you have in there. So there's no need to panic, and it also helps in boosting confidence amongst these investors.
Yeah, there's a question my colleague raised here about how this fresh payments into the sinking fund, what impact it would have on Ghana's fiscal policy and the national budget as well.
Okay, so I did mention that currently, as it is, we are dealing with a certain finite, income resources. And what government has done is to allocate a certain portion of it and dedicated it to debt repayments. What it then means is that there's the remaining portion that should then be, shared across the other expenditure commitments. Okay, and so what it does is to introduce some sort of constraints to the other expenditure commitments we have. So we can see that there's likely to be some type of constraints on our fiscal policies. But of course, I'm sure government has its own plans, perhaps around expenditure rationalization, where they are looking at, various drivers of our expenditures and cost, and checking which ones can be eliminated entirely, which ones can be minimized in terms of activities, which ones should then be prioritized, all in a bid to, make some cost savings and provide some fiscal space. Also to look at existing revenue generating measures and see how we can mobilize a lot more revenue from these measures, also to provide additional fiscal space. So this can happen within that context, and it will still manage to, if you like, eliminate or minimize the constraints that this allocation would transfer to the other expenditure commitments if government does it right. So yes, it will have some sort of bearing on our fiscal policy, but if done right, the government will be able to, if you like, neutralize the constraints that it introduces to the other expenditure commitments.
Yeah, and how significantly, for example, on our overall debt servicing burden. And I also wanted to find out what are the risks associated with the sinking fund, for instance.
Yeah, the impact on our debt service burden would be particularly within the short to medium time to reduce our debt service burden, because obviously as you pay your debt commitment, both principal and interest accumulated, you also do away with the servicing that comes along with it, because if you don't have the debt, then you're not servicing it in terms of interest commitments anyway. But we've seen in time past that our governments have tended to rely on these domestic bonds. So it's not impossible for them to go back at a later time to issue more bonds, to sustain government programs, etc. That in itself is not a problem. We just have to ensure that we are doing that within a healthy economy that will sustain the repayments going forward. Once it's a cycle that you borrow, you pay as and when you need to, the confidence, from the investor community remains, and you shouldn't have, too much problems. We talk about the risk, right? The risk, I think I've already highlighted the main risks. The main risks, particularly considering that we are on an IMF program, is the fact that it may introduce, some constraints on other expenditure commitments. And if we are unable to mobilize revenue, increase our revenue, or get through or be successful with our expenditure rationalization, which is to reduce expenditure, then you're looking at instances where the constraints can lead to us missing out on fiscal targets that we have agreed with the IMF, and that can then have the impact of us, losing out on the funds that remains to be accessed. But let's not forget that the government has mentioned that they are looking at going back to the table with the IMF team to renegotiate the program. We don't know exactly what they are thinking. It could be around measures that, relaxes the targets within the context of what they want to do, such that they may miss out on those targets, but they may be able to renegotiate for them to still have access to the funds, or maybe even increase the scope and the amount involved in the program in the first place. So all these options are on the table to look at, but the risks are there to also deal with.
I mean, we have just 30 seconds. You sort of mentioned its impact on investor confidence. I also wanted to find out, I mean, how significantly would this boost investor confidence?
Yes, this is quite significant, because what government has done is effectively to communicate that me repaying your debts is my number one priority. That is why whatever the size of my income resources are, I have made an allocation out of that to ensure that even before the coupons mature, there's a set amount to cater for payments of that amount. Again, all of this is happening within the local scene, but these are things that the international investor community looks at as well, including our international credit rating agencies. Whenever they do the ratings, they look at what's happening locally as well as what's happening with our foreign creditors. And so if this positive news is picked up and they can validate government's commitment towards ensuring that is sustained into the future, that's something that is going to impact positively on our credit rating. And hopefully it continues in that manner, and we are able to return to the international market to source for funding whenever we need.
Thank you so much. Dennis Brown, Associate Director, Deloitte Ghana. Appreciate your time with us on The Marketplace. You're watching The Marketplace here on Joy News. We're taking a short break. When we come back, we'll be talking insurance. Well, welcome back to The Marketplace. President John Mahama has appointed seasoned insurer and former Chief Operating Officer of Waika Reinsurance, Dr. Abiba Zakaria, as new Commissioner of the National Insurance Commission. There's more in this report.
Joy Business understands that the new National Insurance Commissioner, Dr. Abiba Zakaria, formally began work yesterday. This was after some informal engagements were done at the Commission last week, following her nomination by President John Mahama. Joy Business is learning that there were some form of engagement with the staff yesterday in terms of introduction. Dr. Abiba Zakaria is taking over from Michael Andor, who had been in the acting position since 2022. Dr. Zakaria last year resigned as Group Chief Operating Officer of Waika Re Insurance Corporation, which is owned by members of the West African Insurance Companies Association, with presence of all over the world. He has more than 30 years of experience in the insurance industry. Before joining Waika Re, she was the Managing Director of Ghana Re. Dr. Zakaria is a chartered insurer and a fellow of the Chartered Insurance Institute of United Kingdom and the Institute of Risk Management Professionals of Ghana. She holds a Bachelor of Science Honors from the University of Ghana and an MBA from the same university. She earned her PhD in Management Studies from the Swiss Management Center.
All right, joining me to discuss this is Larry Giaga, who is an insurance expert. He's also Chief Executive Officer of Risk Management and Advisory Services Limited. Thank you so much for joining us here on The Marketplace. What do you make of the appointment of Dr. Abiba Zakaria as new Commissioner of Insurance? Good pick. You're muted, sir.
All right. Can you hear me now?
Yes, I can hear you. So I was asking your thoughts on the appointment of Dr. Abiba Zakaria as new insurance commissioner.
I must say that is a very excellent appointment. The president got it right. You have just read her credentials. She has a wealth of experience, having worked with SIC, Ghana Re, and Waika Reinsurance PLC in Sierra Leone. Abiba has been in the market for some time, and she's learned the ropes, and I know she'll bring a lot of changes to the regulatory environment.
Well, I guess the major challenge for the insurance industry still remains boosting insurance penetration, and that's the task she has to take on. Where does she start from?
I think it's about exploring new distribution channels. We have used the traditional channels of carrying insurance to the populace for quite some time. But you must also recognize that some efforts have been made within the last 5 to 10 years to use other channels. That is the use of the financial institutions and tech. That is using the telecom companies and other platforms to distribute insurance. There is a lot happening now that we even have app selling the personal lines, such as life, personal accident, motor, as you see all over the place these days. So hopefully she needs to push those new developments such that we get to almost everybody. But if I may, let me explain something. Our level of penetration is low because our counting system is wrong. Other countries add pensions and other types of insurances before they do the computation. So that pensions, our level of penetration will remain low for a very long time. I know for a fact that the National Insurance Commission, in conjunction with other related institutions, are trying to change the mode of calculation, and we may, or the new commissioner will have to pick that up very fast so that we have the acceptable method of determining penetration applicable to Ghana.
Yeah, I want to bring up insurance in the informal sector, microinsurance, in providing low affordable coverage to, affordable coverage to low income earners. I think that's also become very critical. I mean, we've heard of the recent fires in our markets and how many people in the low income bracket are not insured. What can be done about that? What role can microinsurance play?
Yes, a lot needs to be done, and a lot is already being done. There are a lot of companies, especially in the non-life sector, are developing products to cover the micro institutions or companies. But we must also recognize the fact that insurance is about fortuitous events. What that means is that the expectation is that the event will be accidental. And so you don't invite the risks to yourself. The way we build our markets, especially the recent market fires, will make it very difficult for insurers to go into those areas. There are no roads in the markets, the structures are fire hazards and all that. So we need to address this problem holistically. We need to liaise with the regulatory agencies and also the local government agencies so that we have standardized construction for some of these risk exposures.
Okay. Next time we talk, we are going to talk about digitalization in the insurance industry. Hopefully we'll make some time and talk about it, but thank you so much for joining us with your thoughts, Larry Jiage, who is Chief Executive, Risk Management and Advisory Services Limited. I appreciate your time with us on the marketplace. All right,
you're always welcome.
All right, sir. Well, you're watching the marketplace. We are keeping our eyes on the National Education Forum. I don't know if we still have the feed. There you go. The president is going to be addressing that forum in the next few minutes, we believe. We'll bring that live to you here on the Joy News channel, so don't go anywhere. My name is Darryl Kwao. Thanks for watching the marketplace.